Okay, guys, welcome back to the lecture series. So this one is going to be just a single lecture for this week 32 on taxes. And we open up with a quote, "In this world, nothing is certain but death and taxes," famously attributed to Benjamin Franklin. I would like to point out, however, that this quote is delightfully out of date because, as anyone who knows anything about modern economics in America can tell you, even taxes aren't certain, especially if you're rich. So, to talk about how taxes work and why it is rich people don't pay their fair share, let's get into it. Alright, by definition, guys, taxes are any payment made by the people of a local region, a state, or a national government. It is paid directly to them. Now, in our modern terms, that's money. In the old days, taxes could be collected in the form of things like labor or crops grown. Obviously, modern economies don't work that way. Now, the thing about taxes is nobody likes them. Even people who know how they work and actually understand them, like economists, don't like taxes. Nobody likes giving away their money. But anytime somebody tells you that they don't like taxes, I politely remind them that, well, do you like roads, schools, a police force, toilets that flush? Congratulations, you need to pay your taxes. Taxes are used to pay for the various services that the various governments do. You pay your local and your state taxes for their services, and you pay your national federal taxes for their services, such as, say, the military. Now, every now and then, some idiot likes to go on television and talk about how taxes are unconstitutional. They are, in fact, constitutional. Article 1, Section 8, Clause 1, Constitution, grants Congress the power to tax. And the 16th Amendment then expanded that with the power to levy a type of tax called the income tax, which was created about 130 years ago or so. Now, there are still limits. Okay, the Constitution gives the power to tax, but it also gives limitations. For instance, in theory, and please note the deep air quotes in my voice when I say that, taxes are supposed to be used by the federal government for the common defense and general welfare, quote. Now, whether or not they have been used that way properly, especially in the last 30 or 40 years, is going to vary wildly depending on who you ask. Now, much more in practice and less in theory is that taxes have to be the same in every state when it comes to federal taxes, and that is true. The federal tax rate does not change state to state, and the government is not capable of taxing exports, meaning things that are sold from the United States out to other countries. You are allowed to tax imports, however, those are called tariffs. Now, the kind of taxes that affect people in terms of what we most are concerned about are progressive, regressive, and proportional taxes. Now, what we have in the United States for income tax is what's called a progressive tax, meaning that it takes a larger percentage of income from the wealthy than the poor. The argument for this is that if you're wealthy, you can afford to pay more taxes, and therefore you should have a higher burden. The idea being that if you make $1 million a year, you don't need $1 million a year to survive. You can pay 25-30% of that, and you're going to be just fine on your, $700,000. By contrast, if you're poor and you only make, say, $30,000 a year, it's more reasonable for you to pay a very small tax rate, 5%, 10%, or even less, because if you're paying 10%, you're still surviving on only $27,000. Now, the argument against is that this is uncapitalist, and this restricts freedom, because, as the argument presented in the slide goes, why should the hardest working, please note the sarcasm there, and most successful, please note the sarcasm there, pay more taxes? The idea is, for arguing against progressive taxes, what we do now, is that the wealthy are over-penalized for being successful. Now, again, how much being wealthy has to do with your personal success and your hard work is very much up for debate, especially considering that in America especially, most rich people don't work as hard or have benefited from an early economic system rigged in their favor. So progressive taxes, while very unpopular with the wealthy, are very popular with the middle and lower classes. This is what we pay with income tax today. So here's an example for you guys. I'm not going to go into it. You can read the math. Now, the next version is the regressive tax. And the regressive tax in the United States exists in the form of sales tax, which is when a higher percentage of income is taken from the poor than the rich. Basically meaning that if I'm rich, I have $1 million, paying the 8% sales tax doesn't affect me as much for, say, toilet paper than it does for a poor person who only makes $30,000 a year. That 8% tax represents a far smaller percentage of my income than it does the poor person, and therefore it's less of a burden for me. Now, the argument for it is that if you can't afford the tax, you don't buy the item. I'll get to that in a minute. The argument against it, which is why it's only used in sales tax, is that the tax harms those who can least afford it, especially when we're talking about necessities. Now, most countries in Europe do something that I personally quite like, which is they use a system called the VAT, and it's a value-added tax. It is a type of regressive tax that specifically does not apply to necessities. So things like food, bread, milk, and stuff like that are not taxed at all. But say high-definition liquid plasma OLED screens have a very high regressive tax added to them, 20% let's say, because they are not a necessity, they are a want, not a need. Only the wealthiest are going to buy them. And that's how you can use a regressive tax that's a little more fair. So we see that a lot in Europe and a number of Asian countries, not so much in the United States. We have some math here for the regressive tax. You can follow that on your own. Next one is proportional tax. Now, we do not have a proportional tax in the United States. You do see them in a couple other places. But basically, it's a proportional tax, exactly what it sounds like. It's also known as the flat tax, where the same percentage of income is taken no matter who you are, meaning that if you make $1 million, you pay 10%. If you make $30,000, you pay 10%. Now, the argument is technically this is equal, technically. The argument against it, however, is that because the poor have a much smaller margin of loss that they can handle in taxes before they are unable to survive, a flat or proportional tax is unfair to them in the same way a regressional tax is. So this is why you sometimes hear certain political parties like the Tea Party, which is an extreme right-wing group within the Republican Party, they like the flat tax, but that's because it benefits the wealthy. And here's the math for you. Again, I'm going to skip on. Now, how taxes are taken. Federal income taxes are on what's called pay-as-you-earn system, meaning that every time you get paid, some of your tax is withheld, and it is withheld automatically based on the data you give on your W-4 when you join the workforce. Okay, and the federal tax in brackets, these are very old, 2008, 2007. If you guys look in the documentation I have provided you, the PDFs for the 1040 exercise, you will find the current up-to-date ones. But basically, you can see here that they used to go from 10% on the lowest to 35% on the highest. That was recently changed by the Trump administration, and the wealthiest people now pay a lower effective rate of 28% at the top. So it was lowered by quite a bit. Now, the way tax returns work, and this is going to be the core of your main activities today, you'll do a guided one, and then you'll do a couple on your own. Now, what I wanted to do was we were going to spend about 3 to 4 days going over these, and we were going to fill out tax forms. We were going to do some W-2s, some W-4s, 1040s. We were going to go line by line, and we were going to do some detailed work. Unfortunately, situation being what it is, you guys are going to have to follow the guided video I gave you, follow the written instructions, email me or ask in conference calls what kind of help you need. And you guys are just going to do the most simple form, which is the single taxpayer, no dependents, standard deduction. This will at least give you an idea about how filing tax returns works, where you file it in with the information you provide to the IRS. If you pay too much, they give you a refund. If you pay too little, you must pay the balance. Now, normally, they have to be filed by April 15th. Obviously, during this pandemic, special circumstances, they have been shunted to, I believe, July 15th as of the time of this video. Now, besides income taxes, there are several other types. There are Social Security taxes. Most of you will pay into Social Security. That is a program in which you pay money, the money is held in trust for you, and then is dispersed at a greater value to you later on when you retire. Now keep in mind, Social Security assumes that you will retire at a certain age after a certain number of years and that people will continue to fund it. There's a large question these days, and has been for about 20 years, about whether or not Social Security is a program we should still keep up. Medicare is somewhat less controversial in terms of its usefulness, in that you guys will also have money taken out to pay for Medicare, which is the national health insurance system for the elderly and for people with disabilities. There's also unemployment taxes, which some jobs collect. I do not because I'm a teacher, but unemployment taxes are small amounts of money taken out that are put into a fund in order to help pay out unemployment benefits, which some of you guys have probably been seeing a lot about that in the news since, again, as of today, over 17 million Americans have lost their jobs in the last month due to the whole country shutting down. Now, some other type of taxes, the excise tax, which is the American version of the VAT, where we see a tax on the sale or production of certain goods that are luxury, or sometimes they're called sin taxes. And you'll see them on things like cigarettes, alcohol, gas, telephones. For instance, cigarettes are pretty cheap, guys. Cigarettes are paper, dry leaves doused in chemicals, and they're rolled into a tube. It's not like they're expensive to make, but the reason why a pack of cigarettes costs like $6 is because it's about $1 for the actual cigarette and about $5 for the sin tax, or the excise tax. That is used to discourage people to buy and, of course, raise money. You've also got estate taxes, meaning that if you have over $1.5 million when you die, and keep in mind, guys, this represents like 6% of Americans, then there is a tax value taken out to the government. Now, people who don't like it, i.e. the wealthy, called it the death tax because, again, they think it's unfair to wealthy, successful people. Keep in mind, of course, that the people it's unfair to are the same ones that are still inheriting hundreds of thousands, if not millions of dollars. Other taxes, gift taxes. If you give somebody a gift in property or cash, you have to pay taxes on it. There's a minimum amount. You'll see there it's $10,000 per year you're allowed to give tax-free, but anything over that you have to account for. So this was specifically put in some decades ago, I want to say back in the 1930s, to prevent rich people from just giving their children money to avoid taxes. And then, of course, we have import taxes known as tariffs. Now, how is it spent? You'll notice this chart, guys, is from 2003. It is very out of date. You can find more modern ones, but the basic numbers are still worth looking at. You'll notice Social Security is the highest expenditure, followed by the defense budget, meaning the military. The only thing that's changed, we now spend more on defense than anything else. Defense is now by far the highest percentage of our budget. I want to say somewhere around 1/3 of all our money is spent on the military these days. And then, of course, we see it broken down more. You can look on that on your own. Now, what do we do with that money? We have things like entitlement programs, social welfare programs, things like Social Security, Medicare, Medicaid, food stamps, discretionary spending, which is things like defense or education. You know, you can see all the whole list here, all the things the government spends the money on. Now, when the government has money, they have either a surplus or a deficit. You guys should recognize these terms from way back when. If the budget is balanced, they're spending, collecting the same amount. If they have more money, it's a surplus. If they're deficit spending, meaning they're spending more than they have, which has been true since the Iraq War in 2003, then we are in a deficit. Now, state and local taxes, they are used on state and local services. For instance, state taxes, sales tax, excise, income, corporate income, state spending, education, public safety, highways, transportation, public welfare, art and recreation. We'll skip that. And I will leave you here, guys, because I'm out of time on local taxes, where we see how they are set up most importantly for you guys on things like law enforcement and schools.